In this video, I'll be doing a video walkthrough of VRTV. This was one of the biggest winners last year in the markets. And what we're going to be doing in this video is sort of doing a top-down approach of how it fits into our process. How does it fit into our system? What kind of edges and entry tactics can we, should we have executed on this particular ticker? And what were some of the fundamental metrics that could have put this on our radar? Because this ticker from year-to-date gain was about 489.56%, and this was one of the biggest gainers last year. So on the left side here, what I will be doing is we'll write out the key points. So the process, how does it fit our process? The second key point is the edges and the entry tactics. So this is how I like to break down when I'm doing or analyzing winners from 2021, 2020, you name it, whatever year. If you're going back and doing a study, I like to sort of say how does it fit my existing process, and then if I see a theme that I keep missing winners in the market, then I tweak my process, quarter over quarter, year over year, try to, make it slightly better so that I could catch more winners in the market. What edges how does this name, if it's a winner in the market, it should show the edges that I employ, or if it's a winner in the market and it doesn't show the edges that I currently have in my toolbox, then I need to get better as a trader as well. So, and the last one is entry tactics, probably the most important. This includes position sizing. At what points would I have position sized it well? At what points would I have tackled the way I enter this name differently? And then ways to get involved and have a position in the name. So we'll cover all of that in this video. And if you guys have any questions, you could put them in the comments. I'll follow up, and let's get started. So basically, one of the first things that we look for at TL is the very obvious, this first bar of 9 million. This was about 9 million in volume, and this was the highest volume ever. So this was the highest volume ever. And what we call this is HVE, and this is a HVE. So that's one of the first edges that was on this name early in the year, right around March. This name moved up above the 25 area and closed at, I made a high of 45 and closed at about 35. So for whatever it was, there's something that happened here that caused the highest volume ever. It caught someone's attention, and that is all we need to know from a price and volume perspective in the markets. Now, from a process point of view, this would have been on the TL Gappers watch list, which again is one of the three key watch lists that we have. So we have the HDF, we have the IPO, and we have the Gappers. So we have these three watch lists, and it would have fit our existing process under the TL Gappers watch list. Now, the third part of the puzzle is, okay, we've identified this potential opportunity, and then now how do we find our way in to this particular name? So one of the things that I like to do is after we get this highest volume ever, we have a couple of entry tactics. We can employ the HVC, which is the highest volume close, which is right around this 35 area. So it closed at about 35.53, and this 35 area would be of interest to us, which is the high volume close, and we call this the HVC. The second entry tactic is we have the WN, which is the whole numbers. And the closest whole number to this would have been, again, 35 area, to see if we could get involved in this particular name, or if it could develop respect for the 40 mark. And if and when it does that, we can potentially enter this name. So the third thing that, or the second edge that I try to look for, is some sort of relative strength. So how do we know that this 9 million bar that we had, which was the highest volume ever, this 9 million bar that we had, how do we know that was accumulation? How do we know that was accumulation or distribution? How can we interpret that on a consistent basis? Because we've seen stocks that go up, close well, but then completely get smashed over the next couple of weeks or months. And how do we know if this bar is accumulation distribution? One of the ways is to look for, follow on, follow through volume, which is FOF TV. So that's this bar right here. So whoever bought on this particular day, you want them to be coming back and buying more stock the very next day. And we call that the FOF TV. The second thing that we look for is ranges. If a stock is under institutional accumulation, what happens is ranges tighten, the stock is controlled. So when we say ranges, that's the high of the daily candle to the low of the daily candle, and the difference in this range, things start to tighten up quite a bit. And the third thing that I look for after this 9 million bar to say if it's accumulation or distribution is, how is the volume on down days? And this third point that I'm making, I think, is fairly important, is if it's coming in, is the volume almost as equal to this 9 million or half of it, or equal to the follow-on follow-through volume that we saw? If that's the case, it's more likely to be failure prone. If that isn't the case, that means that's, again, a positive and tells me or gives me a clue that this 9 million bar was accumulation. The fourth and final thing that sort of runs through my mind is, where are we in the market cycle? And are we early in the market cycle? Are we right around, day 1 to 4, or are we right at that day 5 area where we could get a stress test? Exactly, how does the market cycle play? So what happens is, if we're early in the market cycle, these things tend to work right away and make big progress. Or if we're late in the market cycle, they're going to consolidate and then maybe make their way out and go for a 400+% run in the markets. So all of these things are sort of playing in my mind once I see this highest volume ever edge, and I want to see relative strength in different forms after the fact, so that I could get involved with my entry tactics, which are the whole high volume close and the hold number. So a few very obvious entry tactics. I usually have two types, right? I'm either buying weakness, which I like to call them bottom side pivots, or I'm buying top side pivots, depending on a lot of these factors. Where are we in the market cycle? Do we have follow-on, follow-through volume? How are the ranges? Is it tightening in action, which is indicative of accumulation after the fact? And how's the volume on down day? So I have two types of pivots that I define, and pivots are basically prices. These are actual entry prices that I define. Or the other way I like to look at them is risk levels. So if I'm entering this stock at 40, 50, my risk is going to be $40. If it undercuts, underpins 40, maybe it's not ready yet. Or if it comes back in and it starts to respect 35, and then I could buy at 35.50, this could be my buy. And my sell stop, usually I keep it a few cents below, could be 34.95, and that gives me less than 50 to 60 cent of risk. and I could really control. If I can control my risk in the market consistently, then I can make money in the markets on a consistent basis. So one of the first entry areas that I see on this name is after that, after this initial rally, this very second day right here, it would have respected that 35 area and come in, see follow on, follow through volume. But if we take a look at this, the market was just coming out of some sort of consolidation or was under pressure. So what we see is relative strength right away after the fact. It's trying to buck the market trend because the market was under a little bit of pressure and coming off of its highs. So the market was coming in, and this name was trying to fight the market. So that's our second edge, is relative strength, and we see that right away. We also see that our entry tactic of 35 and HVC are both respected on this particular name. So that's once again a positive. And then when we would review it on a nightly basis on the TL Gappers watch list, it should make our focus list as well. Now we have what we have now is basically a framework that will set us up for success consistently. Even if we miss VRTV, at some point in time in the markets, we're going to have another VRTV show up that has all of these characteristics that were sort of jammed in right in this area that would allow us to have it on our focus list. So 35-40 area is what I see here. One of the issues with this particular name is it's a lower dollar average volume. It has a lower dollar average volume, so it trades around that 150 to 200K shares. So that is, in hindsight, that could have been one of the reasons that I would ignore. But in terms of price action, this is one of the best names. And a lot of the edges and entry tactics that we use, this name seems to have exhibited most of them. So there's respect. So as market came in, there's respect for 45. There was respect for this whole 40 area for quite a while when market came in or was under pressure right here. So there's a lot of, and I'll pinpoint these so that we could take a look at them exactly. So like this area, market was coming in, it was holding that 40 area. This area, the market was coming in and ultimately held the 50. So let's discuss entry points, specific entry points. So if I were to enter, I know that I have the HVC edge, the HVE edge. I have relative strength. It's holding and respecting the HVC, and there's respect for 40. This could have been an area of interest to me. Another one would have been right around here. The narrow ranges, there's a failure at the 50 mark, failure at the 50 mark. So there were two failures at 50, and then it came in, got supported at 45 and came back through that 50 area. So let's write down some of these entry. So entry 1 would have been $1.40 area. Entry 2 could have been $1.45 area, and entry 3 would have been $1.50 area. This would have been our top side pivot. So I'm going to call this TP, our top side pivot. This one would have been our bottom side pivot. So let's just put an S so that we don't get confused with BP. And this will also would have been our bottom side pivot. So I try to box in names, and it makes it really easy for me to manage a position. That's really what I'm trying to do. I'm not trying to make things hard for myself in the markets. I'm trying to simplify and pay attention to a few things and be really good at those few things so I can consistently make money from them. And what we see is, after we have a failure at 50, break above the 50, and we get above it, now it starts to build respect for 55. And I'm not making this up. 55.11, 55.28. That's respect for 55, respect for 55. The stock is telling you that it's respecting a level, especially when the market comes in and it still respects that $1.55. That's a huge clue. That's a respect for a level after it broke out right here. It broke out right here and then it respected the 55 level and then moved up and out of there when it was time. Now, once again, entry 4 would have been $1.55. That's your bottom side pivot, right? And this is confirmed several times. 55 holds, 55 holds. So it's given you a lot of confidence in that 55. Same thing here. It undercuts 40, holds 40, holds 40, and then holds 45 and goes through 50 after attempting it twice. So 55 would have been another bottom side pivot. And then right around here, I could have defined another entry area of 65 just to keep it simple. So it attempted 65, failed, came back in, held 55, 60, held 55, held 55, and then tightened up right around 60, attempted 65. This is the first attempt to 65 again, or the second attempt. And then the third time it went through that area, it was successful, and then we get more consolidation. The other thing, if, for example, you were long from the 40s area and you got this breakout and you held your position as it held the 50-day, held the 65 EMA and the 50-day, continues to hold here, the name made it very easy for you, and you would have gotten out right about here, because that's the break of the 50-day. That's day 1, close below it, day 2, close below it, and 2 closes below the 50-day or the 65 EMA. That's a sell rule for me personally. So entry at 35 area could have been something, entry at 40 could have been something, at 45, and then topside pivot of third time through that 50, get above that 50, come into 55, hold 55, hold 55, get above through that 65 area on its 4th attempt. Then you can manage that. So if you got in early and closer, to this HVC area, edge that we have, it's much easier to manage the position, and it works for you from there and out. So another area is the market came in here, started exhibiting RS. The name is just giving you feedback that it's not done yet. And then right around here, the market sort of, was drifting right at all-time highs, and then this name started to exhibit relative weakness, which is the opposite of relative strength, and that would have basically pushed you out right around the 110 area. So from about $40 or $50, you would have even gotten at least a double out of that, just with the framework that we have in place. Now, the other edge that you can take a look at is the fundamental edge that we have in the markets. And I'm going to flip over. I'm going to erase all of this, and I'll flip over to Market Smith quick to show you guys that, and then we could wrap up this video. So with respect to this name, if we see Market Smith, positive earnings for 2 quarters, some good estimates right around this area as well, and numbers. So that if we take a look at, this was about March area. So they had a breakout, EPS quarter, but there wasn't much with respect to fundamentals at that point in time in March. So I'm going to take a look at ownership. So right around March, you can see this HVE. The next time they reported, the number of funds went from 291 to 330. That tells you that whoever was buying here, there was a bunch of funds that were buying when fund ownership was reported in this area. So this is where they reported a fund ownership of 330, and this is where they reported a fund ownership of 291. So that increase in institutional ownership shows you that there's accumulation of stock in this area, and that's further confirming basically that funds are continuing to add. And as of December, when they reported again, there's a slight increase of 4 funds, but it's best to get into these names in these areas rather than over here, because that, later, first gap, second gap, even you want to call this a third gap. So 1, 2, 3, fourth gap, you're getting really stretched now, and it's logical to see a steep pullback after such third or fourth gaps on an individual name. The other thing that I also want to cover in this video walkthrough is the weekly chart, just to get a big picture. So this name IPO'd, struggled at right around that 50 area if we just draw a line here. But what's different about this run than any of these other, distribution, this is when you're in a downtrend, you continue to get smacked or punched in the face. But, this volume stick, it just sticks out like a sore thumb, and this weekly closing range just sticks out. And this is what makes it special. This is what this name had that many other names didn't have last year, was this highest volume ever. That caused, so this is the cause, and this is what we get. This this HVE area, this is the effect of the HVE area. So that's why we look for it in the markets. And then this bigger picture also tells you that we ran right in on that gap. We ran right into that $50 mark, and then we had this run. So it was really logical for us to consolidate around and then push through, consolidate again right around the 60 area, and then push through and really run all the way up. So with that, I just wanted to show you guys that the framework that we have in place allows us to find these winners in the markets. Is it always going to be that you'll catch all of them 100% of the time? Likely not. But is it validating that eventually, in even a decent year, you should catch 3 or 4 of these that will really allow you to level up and have a huge return in the markets? Because position sizing is going to play a role, and you'll be confident that that HVE is an edge that consistently works, or the entry tactics that we have consistently work, or things that we look for consistently work. All of those things play into position sizing at the end of the day, because position sizing is what dictates our performance and our return on our capital in the markets. So I hope that helps. If you guys have any questions, follow-ups, anything that you think I didn't cover well, feel free to leave that in the comments below, and I'll have another one out sometime in the second week of Feb, so that we'll continue this series of the best stocks in 2021.